A very good evening to all the participants here. Today's topic is more about your doubts. It should be better that I'll explain you certain criticalities of this, which is to my mind important when we file the first return under GST. But I will request as per your questions, whatever are your questions, please ask them, and so that we can take it forward and we try to answer all your questions to the best extent possible. Coming to first is returns. So returns, when you speak about returns, for the month of July, the GST Council has given certain relaxation, wherein it has been stated that regular return for July was to be filed GSTR 1 on 10th of August, GSTR 2 on 15th of August, and GSTR 3 by 20th of August. However, they have given certain relaxation and they have stated that this normal outward supplies return and inward supplies return for the month of July can be filed. For July, it has to be filed between 1st and 5th of September GSTR 1, and for GSTR 2 it is 6th to 10th of September. Similarly, they have given a relaxation for the month of August, wherein instead of filing it on between 10 to 15th August 1 and 2, September 1 and 2, now for August you have to file GSTR 1 between 16th to 20th September and GSTR 2 between 21st to 25th September for the month of August. However, GSTR 3, the formats are also available. We have attached these formats in the return. You can download these formats and have a glance to the same. But the thing is that GSTR 3 has to be filed on time for July and August also, which is 20th of August for the month of July and 20th of September for the month of August. Instead of GSTR 3, they have stated it will be GSTR 3B. It is nothing but a consolidated return of your total outward supplies. They will be asking you the values only, the total outward supplies, the total exports, the total supplies to SEZs, and similarly total inward supplies that you have received. On self-assessment basis, you have to see what credit you have availed, and based on your self-assessment, you have to file your GSTR 3B after paying the net tax liability. So the question many people asked me is that what is the due date of payment of taxes under GST? So per se, the law does not tell you a particular date, like in erstwhile regime, excise had to be paid by 6th of the next month for March 31st March. Similarly, service tax was the 6th of the next month. VAT was depending upon various states, 28th, 21st or 30th of the next month depending upon various state laws. But GST regime, they say before you file your GSTR 3, which is a consolidated return of your output tax net of your input available, before filing of GSTR 3 you have to make the payment. So payment date is not the last day of payment. You can say it is 20th of the next month, but however it is a option upon the SSE. SSEs can file it, pay on their own. It will be kept with the government in the electronic cash ledger, and then whatever the liability comes on the 20th of the next month when you have to pay the liability, the same amount will be adjusted from your electronic cash ledger. So it is not that you have to pay only on 20th of the next month. You can pay it at any time. You can pay it today, you can pay it tomorrow as per your wish. It will sit in your electronic cash ledger, and this payment has to be made tax category wise. So there are three types of tax category: CGST, SGST and IGST, which we have already discussed in earlier webinars, and everybody by this time has a fair knowledge of what is CGST, SGST and IGST. So you have to pay in one challan various liabilities. You did not bifurcate it for goods or services. The total liability has to be paid. There is a question from Mr. Rajiv. He tells, I am an entity by a name of ABC and based out of Haryana. I have a customer in Haryana, say XYZ, and he asks me to bill to a material to UP XYZ corporate office and ship to XYZ Haryana warehouse. In this case, CGST shall be paid or IGST. Sir, your question finds the reference. Your answer would be there under section 10, subsection 1, subsection B of the IGST Act, which says in case of bill to ship to cases, the place of supply would be the place of the original buyer. So in your case, who has placed you the order? The order have been placed by XYZ, by a customer in Haryana XYZ. So whatever GST number your customer of Haryana, say XYZ, gives you, you have to bill it to his address, and accordingly you will send the goods to his warehouse at Haryana. So suppose you are in Haryana and XYZ has asked me to bill the material to UPXYZ. So UPXYZ, when you bill it to UPXYZ, means the ultimate consumer becomes UPXYZ. So in case the ultimate consumer is UPXYZ, the place of supply would be UP, though there is no interstate movement of the goods, still the place of supply would be UP, location of supplier is Haryana, so you have to charge IGST, but you ship the goods to Haryana state also, in the Haryana only, still you have to charge IGST because the principal place of business of your original buyer, as per your question, is UP, therefore IGST has to be charged in the given case. Hope that is clear. So coming back to our returns. So generally GSTR 1, 2, 3 is fine. When you see you can have a glimpse at what type of details are required in the same. You can see. Sir, again your question is, so you mean to say that if I bill to Haryana XYZ and send material to UP XYZ, I should apply IGST? No sir. If you are billing to Haryana XYZ and your location is also Haryana, then you have to charge C plus S. The law says under 10(1)(b), in case of bill to ship to cases, the place of supply is the place of the principal buyer, the original buyer. So who is the original buyer for you? If the original buyer is at Haryana, though you are sending the material to any other state and you are also located at Haryana, you have to charge C plus S, though there is an interstate movement of the goods. This is an exception to section 7 of the IGST Act, which defines what is interstate and what is intrastate. So the thumb rule applies. You have to see your location and your principal buyer's original buyer's location. If both are in the same state, no matter wherever you deliver the goods, you have to charge C plus S. If your location and your original buyer location are different states, no matter whether you deliver the goods in your state itself, you have to charge IGST. So there is a simple phenomenon to that extent, sir. So how would this return process actually go? If we can just see the return process, you have to upload your GSTR1. So GSTR1 is the main return of your sales, which you have to upload, wherein you have to give all the information of your sales made to various customers, B2C customers, B2C large, all your debit credit notes or your tax liabilities of advance payment if you have received. So all those details you have to give in GSTR1. The offline utility of filing this return is also available now under the common portal under the GSTN website. You can log in there, download the offline portal. They have made a very good software wherein you need not have any particular ASP or GSP service. The government is giving you a particular software wherein they are giving you 2-3 options. You can directly upload the details in an Excel. You can use CVF files and then upload the same for individual line items, or else you can manually enter those details. If you have a small business, maybe 4 or 5 invoices only, you can manually enter those, and at the end of also they are given you an option to create a JSON file and upload the same under the GST, under your login ID password, so that the return is ready. So the department has offered various types of formats available. What you need to ensure that the data that you get from your accounting software is as per the data in the format which the government wants you to upload in. If that is satisfied, you working any ERP, Tally, SAP or any sort of ERP, your objective should be getting the data in a particular Excel format, and once you can achieve that, it is very easy to upload the data. So what happens? So you file your GSTR1. So once you upload the GSTR1 by 10th of the next month, as you saw on the last chart, next you have to file your GSTR2. So what is 2? 2 is nothing but an auto-populated return wherein all your vendors who have supplied the goods to you, it will be auto-populated by the GSTR1 of your vendors, wherein they mention your GSTR and GSTN number, and on that basis you have to check whether your vendor has correctly uploaded the sale detail or not. This is how government is trying to match the detail by the vendor and by the supplier, by the recipient at the same go. So one person is uploading the sale details, for the next person it is a purchase. So if that person is entitled to the benefit purchase credit of the same, that person will check whether the data that you have uploaded is correct or not. So instead of government checking the same, they say, okay, let it be on the SSEs. If the SSE is into the business, then they will of course know, they will of course want to check whether the vendor is correctly uploading the detail or the not. So you will get all your inward details, all your purchases details of goods, services, anything in your GSTR 2A, which will be auto-populated. And what you need to do, you need to check the same. So you need to either accept, reject, or reject or modify. So if everything is okay, you may accept it. As soon as you accept, your 2A becomes your 2. Similarly, you can reject some credits if you know if this is not a correct invoice, or you think by mistakenly somebody has given your GSTN number and it is coming in your portal. You can very well reject those, and in case of modification, you can modify the details. Suppose I have uploaded an invoice of 1 lakh plus 18,000. I have given you an invoice, but at the time of uploading, inadvertently I have uploaded suppose 90,000 plus 15,000. So you have all the option to go and modify the same, and you can do this 90,000 to 1 lakh and 15 to 18. Once you do that, then the law gives you some other procedure how the recipient, the provider will check. So we have a question from Mr. Kumar. He says, in continuation of question of Rajiv regarding bill to ship to case, we are in Haryana. Our customer is a major telecom company. Bill to is in UP, but ship to is in Haryana only. Our customer says rule 10(1)(b) is for third party, whereas we are one entity and hence not a third party. So the ship to will be considered as a place of supply and hence CGST is applicable. Please confirm. Sir, third party in the eyes of the law, your customer being a telecom company, if he is registered in the various states, at the end of the day for you, it is a bill to one person and ship to another GSTN person. So bill to you are going to give under one GST number, and where you are shipping, ship to is under a separate GST number. If it is in the same state, there is no issue. But as soon as you go to the another state, as per section 25 of this law, there is a concept of distinct person, and law says a distinct person is a person who has with the same pen in different states, same pen, persons are called as distinct persons. So for you, your customer with same customer at UP or same customer at Haryana will be two distinct persons. And third person logic that 10(1)(b) uses, it is perfectly suiting the bill to ship to cases. So when it is bill to ship to case, then 10(1)(b) has to apply. You cannot follow 10(1)(a) in that case, because 10(1)(a) is very clear case where there is only movement of the goods. But in your case, there is a separate consignor and there is a separate consignee. Though it is one and the same company at the end of the day, but in the eyes of the law, they are treated as a distinct person. And when it is a distinct person, to my knowledge, you have to, if the location of your customer is in Haryana, though you are shipping the goods to UP, you are in Haryana, you have to charge C plus S. But if your customer is in UP and he gives you an order and he tells you to deliver the goods at Haryana, you have to charge IGST. This is what my submission is, sir. To the extent of my knowledge, I believe it has to be C plus S in case your customer and your location are in the same state, otherwise not. Because 10(1)(b) is a very clear provision. So coming to the return process again, sir, it's again a part of interpretation of the law. Somebody may interpret the law accordingly, I may interpret the law accordingly. So again, it's a matter of interpretation. You may take any harmonious call as per your guidance, sir. Fine, thank you. So okay, fine. Once we get the GSTR 2A, we have either accept, modify, or reject. So whatever we do, we have to file the GSTR 2 by 15th of the next month. And once we file the GSTR 2, then if we make any changes therein, suppose in my example wherein instead of 1 lakh plus 18,000, I had showed it as 90 plus 15,000, and my recipient of supply had again amended the same as 1 lakh plus 18. then I would receive a message from in my dashboard regarding the change done by my client, and I will have 2 days time on 16th and 17th to accept or reject the same. So if I accept the same, then on 20th we have to file the GSTR 3. If I accept the same, the change if is done, then whatever GSTR 1 I had filed gets automatically amended, and therefore whatever tax liability I pay under GSTR 3 is considering the total liability, and whatever credit my customer has claimed of 18,000 rupees, since I am taking this as my output liability, the question of mismatch does not arise. Point is, can we modify the return at a later date? Can we modify the invoice also? I mean, if I have wrongly charged GST, but eventually I want to amend to IGST. So yes, it can be done. The law is IGST Act also gives you that provision that suppose you have treated a transaction as C plus S, but the ultimate liability should be I. Then you have to amend the same, but pay IGST again. C plus S what was paid, you will get a refund of the same. There is no interest provision also that you have to pay interest to the government again on the same. You can amend the same. So the law says every invoice, that details of every invoice that you give in your GSTR1, you can amend the same by the next year September. By the next year September return, whatever changes you want to do, you can do the same by next year September of a financial year. In the return of the September of the financial year of the next financial year, by that time you can amend that, and accordingly your tax liabilities will get amended to that extent of your amendment. Modify the invoices means, yes, there are certain core fields that you have to upload. If suppose your invoice number you have entered incorrectly, in the next return you can amend the information given in the previous return. You cannot amend the return which you have already filed, but every return has a column of amendment of information filed in the previous return. So if you have inadvertently filed any information which was incorrect, you get to know after filing that return. So in the next one, when you file the same return GSTR1, you can amend the information relating it to the earlier return, and according the system will alter those details. Mr. Anju Madan sir has a question. I am registered in UP and Himachal Pradesh. I am buying material from Himachal Pradesh and to deliver to my client at Himachal Pradesh itself. Supplier has made the billing to me in UP. Then please advise what tax will be charged. Since I am outside state, IGST to be charged, but movement of goods is that state itself, so CGST to be charged. Sir, again, the question is, you are registered both the states, and you are buying the material from Himachal Pradesh to deliver to your client at Himachal. Supplier has made the billing to me in UP. But sir, if you are also registered in Himachal Pradesh, then why are you not taking the same order in your Himachal Pradesh GST number, purchasing the same in GST number of Himachal Pradesh and selling the same in GST number of Himachal Pradesh? Why have you made the billing in UP? The first question comes. But if suppose you have made the billing in UP and bill 2 is to you at UP and ship 2 is to your customer at Himachal Pradesh, then your vendor, who is your supplier, if he is registered, depends upon where he is registered. If he is registered, if your supplier is registered in UP, you are also in UP, he will charge you C plus S. If supplier is in HP and you have given him your GSTN of UP to deliver the goods at HP, he will charge you IGST as per 10(1)(b). Ours is a manufacturer of pre-engineered building along with trader also of furniture. My company is having a turnover of 50 last year with 6 to 7 branches all over. Do I am eligible to composite order? Sir, composite dealer, you mean to say composite dealer? Composite dealer, sir, your total aggregate turnover of previous year should be 75 lakh, less than 75 lakh. And for special category states, it is 50 lakhs. For Uttarakhand, it is 75 lakhs again. But for all other special category states, it is 50 lakhs. But it is all over aggregate turnover of the previous year. So if your turnover is more than that in last year, in this year, you cannot offer composition. So your question was for composite dealer or composite order. I am not clear. If you can just clarify what you mean by composite order, sir. Mr. Vipul has a question. If a supplier has not mentioned HSN code, I think they are under 1.5 CR, and then how to pass this type of entry without HSN code, sir? This law has given an option to the supplier for small traders of VAT who were not accustomed of this HSN code. So it's a temporary phase that one needs to go through. My humble submission in this case would be, if you know what you are supplying, your supplier is supplying to you, because when you file GSTR 2 under column under serial number 13, you have to give a HSN wise purchase detail. So when you have to give the HSN wise purchase detail to the best extent possible, you have to go to the CBC GST website. There is an online link there. You type the description of the goods and whatever is the closest HSN to the best extent possible. My suggestion would be to self give the HSN, make a HSN self when you pass the entry in your books of accounts, give a HSN, because if you work in the SAP environment without PO, without HSN, the PO may not be raised correctly also. So those cases are coming as an issues everywhere in the industry, wherein the small vendors are not charging, not providing the HSN. But if you know what is the HSN of the product that you are buying, it is most suggested, because you have to file GSTR 2, wherein under row 13 you have to give the HSN wise purchase detail. So better you provide the detail yourself. You are asking for composite order. Okay. So when you say composite order, so you are a manufacturer and a trader. So when you are a manufacturer and trader, you are having 6 to 7 branches. So branches, what type of branches are there? Whether you are storing the goods there, or you are having any particular fixed establishment in those places, or it is just a sales office. First, that needs to be seen. So but if I can answer that, suppose if you are a manufacturer and a trader doing the business only for, suppose say Himachal Pradesh, then from wherever you get an order, from any state, wherever you get the order, you have to bill to your client, because you are a trader, where is the movement of the goods terminating for delivery, and whatever is the registered address of your client, you have to charge C plus S accordingly. But if you have branches, and all those branches, if you are selling the goods from a particular branch, suppose you have a branch in West Bengal, you transfer your goods from, suppose Delhi from Himachal Pradesh to West Bengal, and you sell the goods in West Bengal, then the transfer between Himachal Pradesh to West Bengal of your between the same entity, also GST has to be paid. And then West Bengal, when sells it further to its customer in West Bengal, then the West Bengal entity will take the ITC of the same. So composite order, you are very well eligible to take a composite order, and in the tax invoice, but you have to mention HSN wise details of the goods supplied. You can raise one tax invoice also, or you can have multiple series tax invoice also. That is upon your business call that you take, sir. What is the limit of 75 lakhs? Sir, 75 lakh is a limit for composition, opting for composition dealer under GST. If your aggregate turnover of previous year is less than 75 lakh, then in the current year, first 75 lakh, if your turnover is up to 75 lakh in the current year, or first 75 lakh, you need to pay tax only on the 1 or 2 percentage. 1% for trader, 2% for manufacturer, and 5% for certain notified service categories. And as soon as you exceed the 75 lakh turnover, you have to suo moto go for a regular dealer. So that is composition per se. Mr. Faisal Ahmed has a question. Sir, we are purchasing paints but we are not selling it and consuming it on sheets and selling. Can we take credit? Sir, very well you can take the credit, because for credit you have to see 17, section 17, 16 and 17. Section 17 subsection 5 is a block credit section which says these credits you cannot take. So there is a one particular line item in section 17 subsection 5, it says goods or services used for personal consumption. But here you are purchasing paints which you are consuming on the sheets. So sheets, when you are selling it, the sheets, the price of the sheets also embed the price of the paint that you have made, expensed. That is also a part of the sheet that you sell finally. So there is a direct relationship with your output. You can very well take the credit of the same. Mr. Ambarish has a question. In case of cash discount received against immediate payment from supplier, can we issue debit note without GST? We are paying him full invoice GST amount. Discount is only taken on principal amount for immediate payment. Is it correct? Sir, you can take a debit note without GST. No issues. The government would have already earned GST on the same amount. But better if you know for it's a cash discount and you can prove that it was known at the time of supply, or at the time of supply he is giving you at the same time. So on the face of the invoice, if you show the same amount as a discount, then before charging GST, suppose your sale value is 1 lakh rupees and a prompt payment discount is making immediate payment, in the invoice only you can show a less cash discount or discount of 2%. So on 98,000 only you charge GST. But suppose if you charge GST on 1 lakh full amount and you do not want to exchange a credit debit note for the discount, then then it becomes an accounting debit credit note, but you need to pay the full amount to the government. But your customer who takes the goods from you, a question can come up at his end, because law says to avail the credit, the recipient has to make the payment to the vendor. So in that case, he may not be making the full payment to you. So the government may say that though the full payment, the conditions of the input tax credit under section 16 is not satisfied. But of course, at the end of the day, the customer may very well take a plea that I have, since it is a cash payment discount I have received, but the government has earned whole GST out of the same. It is merely a book entry. Therefore, the credit of the whole amount may also be allowed in such a situation. What is Anti-Profiteering Act in GST? Sir, anti-profiteering is a very big chapter. There are rules, guidelines coming to, there are press release has come up recently regarding what type of anti-profiteering body is about to be set up soon by the GST Council. So basically, anti-profiteering would be something which they want to check all those persons who are taking the benefit, who are getting benefit under GST of their old raw materials or things like that, who are not under the tax net but they have a stock on which the law has given them some notional credits and things like that. So if they are taking any credit, so they should pass on those credit to the end consumer. So the price to the end consumer should not increase. So this is an anti-profiteering measure. It is not only for transitional stock. The government may has all the powers to apply the same for GST regime stocks also, fresh stocks also. When the government may ask you for your cost details prior to GST and post GST, and how much benefit you are availing, and accordingly the anti-profiteering body is being set up. But it's a very wide issue. On what basis the anti-profiteering will see whether this amount has been passed or not is still a doubt. Other developed nations like Malaysia and those Australia, they had a very strict anti-profiteering measures. They had given a formula for calculation of the amount of profiteering. But Indian GST law does not have any such formula as of today. So let us wait for this body to be constituted and detailed guidelines to be issued in this regard. Mr. Amar has a question, sir. What is the procedure for job work under 10 lakh? Need GST or not? Sir, if your aggregate turnover being a job worker is less than 20 lakh and you are not doing any interstate work, then the basic threshold limit of exemption is always available to you. 20 lakh for general, 10 lakh for special category states. So the basic threshold is always available to you if you are doing a job work and your turnover is below 10 or 20 lakhs. Respectively, the basic threshold would always be available to you. But your recipient, if he is registered, then he would be liable to pay GST under reverse charge mechanism under 9 subsection 4 on the sale. Mr. Hanumat Rao has a question, sir. We are paying staff welfare like staff tea, tiffin, drinking water. We need to pay GST on this type of expenditure. In case you pay GST, that GST is RCM or not? So this is a very tedious question in the law, because when you see the provisions of 9 subsection 4 of the CGST Act, it says any supplies made by an unregistered vendor to a registered vendor. Unregistered to a registered. So firstly, when you talk about staff welfare, so all this tea, tiffin and drinking water expenditure, you are purchasing from a vendor. So your broad head of making this expenditure, you call it as staff welfare. But at the end of the day, if it satisfies that it has been made from an unregistered tea or tiffin vendor to a registered person to your company, then you have to pay reverse charge GST, and that also on each line item. So the food tariff may be something else, or the water tariff may be something else, tea may be at something else, or if you purchase from restaurants, or whether you have to pay under restaurant category. So there are many teething issues under this regime, but yes, if you are purchasing these items from unregistered vendor, you need to pay GST under reverse charge and prepare a self invoice also. Mr. Ambarish, can we issue simple challan to a job worker? Earlier 5714 was required to be issued in case of it. What to do? So if you are registered and you are sending goods to job worker, under rule 55 of the CGST rules, you see there is a concept of delivery challan. So the delivery challan, you have, if the goods are being sent to job work for reasons other than supply, then you have to issue a delivery challan. On the delivery challan, you have to give the reference details of your job worker, his address, your location, your address, the description of the goods, the taxable value of the goods, and based on that delivery challan, you can send the goods. If it is raw material, it has to come back within 1 year. If it is capital good, it has to come back within 3 years. If these things are satisfied, no issues regarding that. When the job worker gives you an invoice, if he is not registered, then you have to pay reverse charge GST under 9 subsection 4. Mr. Bharat, under reverse charge, when does the liability occurs? When the bill is booked or when payment is made? Sir, under time of supply rules, guidelines under the Act, if you see section 13 and section 12, it has been clearly mentioned under time of supply of goods and time of supply of service for reverse charge cases. The time of supply would be the earlier of making payment to the vendor, provided the payment is made within 60 days from the date of invoice. So if the payment is not made within 60 days of the date of invoice, then the 61st day becomes the time of supply. Otherwise, at the time of booking. So at the time of booking, however, you have to see the practical scenarios. If you do not book the liability at the time of booking, the expenditure, then you have to keep a track of all those URD expenditures on which you have to pay reverse charge when you make the payment. You also need to keep a track of whether the payment is made within 60 days or not. So in all practical cases, instead of having these tracks, since once whatever you pay under RCM, if it is an eligible input credit, you would be getting the credit of the same. Better pay the reverse charge, book the liability of reverse charge also at the time of booking the expenditure and pay the same and take the credit. Better suggested because of accounting norms. Return process relaxation, this we have seen. You can just go through these slides. So important points to note, every registered person has to furnish the returns. It has to be done online. Even if for a particular month you have no sale, no purchase, still the return has to be uploaded. So even a nil return to be filed. No question of revision of return. Rectification can be done in subsequent returns up till a period of filing September month return of the next financial year. Invoice level detail to be given for all registered supplies. For B2C supplies, only the consolidated details to be given. Invoice wise only for transaction more than 2.5 lakhs and in interstate. Accounting codes and HSNs for goods and services to be provided. Credit note, debit notes, advance, everything has to be captured in the return. Under GST, it's a very consolidated return. Mr. Ambarish asked, do we need to issue invoice at the time of supply? Sir, you have to issue for an invoice at the time of supply because this law, under the old VAT laws, the system was different. But under the GST law, if you see the corresponding sections, the law is very clear that with each removal, you have to issue a tax invoice. Only when you go to the rules, under the rules you see certain relaxations has been provided under specific situations. But those are very specific situations. Every time adhering to those, taking the benefit of those situations may not be available. So when you read section 31, it says a registered person supplying taxable goods shall, before or at the time of removal of goods for supply, where the supply involves movement of the goods, issue a tax invoice showing the description, quantity and value of goods, the tax charge thereon and such other particulars as may be prescribed. So these particulars have been prescribed under the CGST rules for various types of invoices. Types of invoices are there. And similarly, there, as I discussed about delivery challan under Rule 55 of the CGST rule, they have given a concept of delivery challan, and under that particular rule, they have given one situation under Rule 55, sub Rule 4, where the goods being transported are for the purpose of supply, but the tax invoice could not be issued at the time of removal for the purpose of supply. The supplier shall issue a tax invoice after the delivery of goods. So under 55 subsection 4, they have given this provision. But to what extent this provision can be made applicable is again a question of doubt, because under the Act section 35 says for every removal, before or at the time of removal, you have to have a tax invoice. If we receive, Mr. Umesh, if we receive advance from ABC in the month of July and supply of the goods, again the same is in July month, then we need to create RCM and advances. No, sir. I am of the view that advance to be looked at only at the month end. So at the month end, if you have a debtor's credit balance, then only the GST liability on the same has to be booked and paid to the government, because at the time of receiving, it's a normal business transaction. You do not know whether it is an advance, whether supply is made or not. It is a normal business transaction for which you are receiving a money. Advance is an advance against a supply. If the supply has been made, then no liability under advance. So month end debtors credit balance to be checked for the same. So coming back to the PPT. So these are basically some details that we have shared. If they are registered, if you have given 1,000 invoices, value of invoice is 1,000, then invoice wise detail for registered. For unregistered, consolidated detail. But for unregistered greater than 2.5 lakh and interstate, you have to give invoice level detail again. So consolidated return of outward supplies and inward supply GSTR 3, it will include everything, zero rated, interstate, debit, credit notes, everything would be set off and eligible would be level in the GSTR 3. The total credits after reversal under section 17.5, or if you are using something for non-business purpose, common credits are there. So after setting up all those, the GSTR 3 return would be prepared and you have to file the same by 20th of the following month, and payable tax should be paid with the filing of GSTR 3. Mr. Vipul, we have 3 units in intrastate. How to pass stock transfer? I think it should be passed without charging tax. Sir, within the same state, no tax liability arises because you do not fall under distinct person category. You have to just, if you are transferring the goods, you have to issue a delivery challan, nothing else. No other formality to be required. For your accounting purpose, just pass a stock journal from one premise to another price. But for movement of the goods, we have to have Rule 55 delivery challan with you. In GSTR 1, documents issued during the tax period, Mr. Hanumat Rao. Yes, sir, you have to give the details of document like delivery challan, number of delivery challan, the tax invoice, the self invoice, the payment voucher, the receipt voucher, the refund voucher. Many types of documents are envisaged under the CGST rules. So to the extent of the same applicable to you, you have to give the number of invoices raised, starting the beginning number and the end number. If any invoice has been cancelled for any reason, that number of invoices, and then the total number of invoice for that particular period. Mr. Arun, there is a credit balance of debtor from previous time, I mean before December 16. GST has started now. No, sir. All your 30th June debtor's credit balance will not be liable for GST advance liability, because the logic for the same is that GST has come from 1st July. The law says for advance time of supply, if you see, it says advance against a supply. So at that moment of time, when you have to receive an advance under the GST regime. If you have received an advance prior to GST regime, the tax liability will not arise. The tax liability will only arise when you make the invoice for the sale. So it is very clear, there is no tax liability on your accumulated debtors credit balance as of 30th June. Mr. Faisal, sir, we are having a stock of 5,000 metric ton as on 30th June. Paid excise duty credit. How to carry forward to GST and what type of document we need to submit for getting approval? Sir, first, you have excise duty gate pass of stock of this metric ton of steel with you. So now you want to take the excise credit, because in the old regime you were only registered under VAT. So for this there is section 140 subsection 3 of the CGST Act applicable, which the law says whatever stock you have to intimate the same under TRN1. There is a form TRN1. That TRN1 form you have to upload the details of the excise invoice, the stock, the description of the goods, the HSN code at 6-digit level, the quantity, the invoice number, reference, everything has to be given. Once you give those details, and whatever is the excise duty component you will portray therein, the government will allow you the full credit as CGST. Now coming to the checking part of the same. So as of today, the department is not asking to upload any document, but let us wait for the portal to give us the format of TRN1. As soon as that is available, and that only moment of time, you would be able to check whether at this moment whether the government is asking to upload the excise invoice copy also or not, or whether there will be a separate checking of all those transitional credit. But I will tell you, please prepare a detailed Excel sheet of the total number of invoices along with the original tax invoice copy that you have for taking the credit, because going forward, if the checking is done and you cannot produce this document of credit taken, then the whole credit may be denied to you along with interest. Payment voucher and receipt voucher. So receipt voucher you have to issue whenever you get an advance. Whenever you treat a receipt of money as an advance, then you have to issue a receipt voucher based on which tax has to be paid. Payment voucher is all for all payments made to unregistered persons. So if you suppose purchase goods from unregistered person, you may have to prepare a payment voucher for the when you make the payment to the vendor. So for all unregistered supplies, be it notified reverse charge or other than notified reverse charge, you have to issue payment voucher. Receipt voucher, as I told you, it is only for cases of advance received. If in the month end you have certain advance with you on which you need to pay GST, then you have to issue a receipt voucher for each such customer that you have. Is there any specific format for delivery challan, Mr. Vipul? I told you there under Rule 55, there are contents of delivery challan. There is no format of anything in the GST, there are contents. So the contents has to be satisfied. Rule 55 of CGST rules may be referred. Mr. Anju, we had booked an order in the last of June considering GST factors as input, but our client is asking how to pass on the benefit of inputs under anti-profiting measures of GST. I'm not clear with your question, sir. You have booked an order in the last of June considering the GST factors as input. Means you had booked an order wherein you had passed on the certain benefit of input to your customer. So when you had already passed on the benefit to your customer, how does the anti-profiting measure comes under GST? Please elaborate on this. Mr. Umesh, contractor supplying the goods on challan and will raise the invoice on the completion of contract. Is it possible? Yes, sir, it is possible. No issues, because the law says for works contract. When you say contractor, means he is giving you works contract services. So if it is works contract services, he can send the goods on challan, but you will get the credit only when he gives you a final tax invoice, not before the same. For works contract, it is possible where he can send the goods, because in that case, in works contract, the goods are sent for the purpose of supply of service. So it is used for the provision of service. So the movement of the goods can be through challan, but you will get the credit only when the final tax invoice is lodged. Mr. Vipul, is there any specific format every challan? Sir, no specific format. I told you it is only a serial number. Old excise law on capital goods are 15 this year, 15. What is the provision in GST? Sir, GST full credit on the receipt of goods. So two conditions you should have received the capital good and you should have the original tax invoice. If you have satisfied with this, credit 100% credit allowed in the first year itself. Topic is of steel scrap. In the excise regime, we would not have moved scrap to the Dharam Kata without weighing in-house, or else we had to take permission from excise and we have to separate bill book for this. How do you in GST regime? So sir, GST regime, if you want to send the goods for the purpose of weighing outside your premises, then it is not against the supply. So you have to send the same through a delivery challan, and the goods should be brought back based on the delivery challan. Therefore, the option of delivery challan under Rule 55 is available. Under the sender's name, your address would come. Under receiver's name also, your address and name will come. In the description remarks column, you have to insert that the goods are being sent for the purpose of payment to this particular place, and goods would be returned based on the same. No specific permission required. Old excise law, Mr. Matnay. What is TDS return in case of GSTR 7? Do we need to file return for GST and income tax both? Sir, that is a separate concept. Like under various VAT laws, in case of works contract and things like that, the recipient used to deduct certain STDS, state tax TDS. Similarly, under GST, they have envisaged that on receipt of goods or services, the recipient may deduct certain amount of payment from the vendor's invoice, but that has been kept on hold for 2 months again. So let us wait for the final returns and everything process on which goods or services the same to be needs to be deducted. Who will deduct the same? No, not yet notified. So we have to wait for the same. It is not the income tax TDS, but and if the contract period is 6 months to 1 year, Mr. Umesh Chandra, what was your question? Sir, contractor supplying, that is not an issue. It becomes a continuous supply of goods. Whatever be the contract period, you will get the credit only on the tax invoice. If the goods are sent by the contractor or a delivery challan, you will not get the credit. Simple. So you should accordingly tax plan and tell him that for each supply, make it as a separate supply and you receive the goods on a tax invoice, take the credit. For services, he may again bill you separately and you may again take the credit. Regarding your anti-profiting, sir, again I am telling you that if you have already conveyed, then your client may be asking for your cost data, but again it's your internal data, how much you have passed and not passed. You can maximum give him a certificate telling that we have already passed on all the benefits, that all the eligible benefits that we had, not much more than it. If the department questions you, you should have your cost data ready to prove that yes, this was my cost price pre-GST, this is my cost price post-GST, this is the benefit which I am availing, and this is how I have passed it. No permission required. No, sir. If you read section 143, they say on intimation. So, but no provision of specific intimation for job work is there. So, nothing to be done. You have to directly take the goods to your to the weighing to the weigh bridge, weigh the same, bring the back in the same delivery challan. No issues with the same, but issues may come when the value of the goods may be more than 50,000 and the goods are when the e-way bill under GST may come, the rules are awaited. Then there may be certain practical issues which may crop up. Fine. Coming back to this. So return is fine. Matching of ITC I have told, no issues. Transitional challenge 140 subsection 3. One of your persons, one of the audience has already asked about this 140 subsection 3. So a major benefit, but the question is the notional benefit is not available to a manufacturer or a service provider. If you are a trader, then the notional benefit is also eligible. If you don't have the duty paying documents, you can take it on a notional basis, but the same is not eligible for a manufacturer or a service provider. So 140 subsection 3, 2-3 important things that we need to check here is that example is, suppose I am a manufacturer of a particular product on which excise duty was chargeable, but it was exempted under certain notification. And I have my distributors, and these distributors are only registered in VAT. So they had stock of certain goods as on 30th June, on which the goods were excisable, but they were exempted based on certain conditions. Suppose certain value based exemption was given to those goods. So what is happening as on the head of the trader on 30th June, he will be having a stock of goods which is excisable but which was exempted under the old regime. Now as per the transitional CGST rules also, law is given a very wide option, and wherein it has been stated that the trader can get the credit of CGST on notional basis also if he can prove that the goods were excisable, it was not nil rated, and it was not unconditionally exempted. So suppose my goods were exempted based on the condition that if the value of the goods is less than 100 rupees per kilo, then no excise to be paid. So it was a conditional exemption, not an unconditional exemption under the excise law. So the trader having the stock of my goods as on 30th June, on which I had not paid excise duty being manufacturer and await certain exemption, when the trader sells those goods under the GST regime, he will be eligible to get the notional credit of 60 or 40% as the case may be If the goods are 18 or above, then 69%, 60% of 9%, that is CGST component, he would be allowed to take the credit of the same. Very important provision under the transition rules. Mr. Faisal, sir, central excise and sales tax range circles will continue or they will change? Department officer said they will continue as commercial tax, which is correct. Sir, you would be assessed by one person, either central or state. So that allotment has already started in a phase-wise manner, which will take some time to be allotted. Once your commissioner is decided, you would fall under either the state government or the central government, not both. So you would be communicating any disputes, or your assessing officer for all practical purposes under GST would be one person. But whether it would be central or state, it would be decided by GST and portal. If your turnover is below 1.5 crore, then it is state. If it is above 1.5 crore, then it is whether central or state, it would be decided by the GST and portal. Mr. Umesh, if there is no ITC available under 140 subsection 1, then you will to fill section 5 subsection in transfer statement which shows tax liability on balance statutory forms. Sir, this is balance statutory forms. Tax liability has to be compulsory filled. It is not linked with your whatever credit you are availing. It is linked with whatever output you have not paid. So suppose you had shown sale with C forms, and you have, as per CST law, you have to bring the C form within 3 months of the end of the quarter. So now the law, in this law, they have done, they say as of 30th June you have to give all the details of your pending C forms, and if those C forms are not brought back within 30th September, then since you would have paid VAT at a CST at concessional rate of 2% on those sales, the department will tell you, since you have not get the C form, the balance, suppose your goods were taxable at 5%, so 3% would be recovered as under SGST, as SGST. So that is why this has to be given, and yes, this has to be filled. If ITC is not there, that is a separate thing. You do not fill, you fill 00. But balance of C form has to be mandatory filled, sir, because they will try to recover those credits, those C form liabilities, not under the old VAT law, but under the current GST law. That is the intent of the government for asking that information, sir. Next, one more important section is 140 subsection 5. So 140 subsection 5 generally is now coming into picture very well, because what is happening is now many business houses are receiving bills on which central excise duty or for that purpose VAT or for that purpose service tax is charged, and the bill has been received in the month of July. Suppose transporter bill is there, any goods bill is there. So the law for that purpose 140 subsection 5 is very important. Sorry. They say if you book those bills within 30th of July, we will give you the credit. How they will give the credit? Again, you have to go to TRN 1. There is a format there. You have to give all details of what invoices and what goods you have received post July, post 30th June, and you have entered in July. You have to give all those details. And when it is excise and service tax, the government will give you as CGST. When it is VAT, the government will give the credit as SGST. And eventually, if C forms are received next year, do we get the refund? Sir, that is very difficult, because eventually law says under the old VAT regime, it was always the tendency of the SSC that okay, C form can be produced at the time of assessment. But law is not that. Law is very clear that within the next quarter you have to bring the C form. So the law, therefore GST under transition, they give you the quarter time. If you cannot bring it within that time, lost. Post, if you bring, the document will not be of any use, because the law is very, very specific in that extent. So when law is trying to give you some transitional benefit, they are trying to tell you also that if you take this benefit, we are also there to recover the same if you do not bring us a C form. So that has to be very carefully managed. Mr. Rao, if we purchase an unregistered supplier, how we show in GST return consolidated or each and every bill? Sir, under GSTR 2, you have to show it for each supply line item under your self invoice, because under the GSTR 2 you need not give any detail of each vendor. When you purchase from unregistered supplier, you have to issue a self invoice at the month end, and all the details that you portray in self invoice You have to give that detail in the GSTR 2, and based on that, your reverse charge liability has to be paid. Mr. Ambarish, do we need to keep all purchase and sale record as we are doing exercise regime RG register? Sir, no register such as RG, but yes, at the end of the day, it is your own record for the transition phase, and for first 6 to 8, 9 months, it is always suggested to keep all the records properly for all your sales, for all your inputs at least. For purchase register, your RG format is a very good format for the old excise regime. The same may be continued for your internal checking and reconciliation purpose, but law does not tell you to keep any such formats. Law says all your purchase, sale, debit, credit note, and all your accounts data should be kept. So if the department comes, they ask for your purchase statement, you should be eligible to give them your purchase statement. Not any particular format, content should be proper. So basically these were the important transitional issues which I wanted to discuss. Returns I have discussed. Now coming to some compliance burden. So compliance, when you see this law, I am of the always of this view, a firm determination that this law is not that harsh to understand, but it is a law of compliance. So if you can be compliant under this law, you would be selling very smooth, because much thing is dependent upon automation, and how do you get the data from your system, how do you portray the data to your GSTN system. Many things are dependent upon the same. Shall VAT C4 forms and VAT D1 forms in Arnash also provided by 30th September? Sir, what is VAT D1 and C4? I am not aware of those particular forms therein. But law says what are the forms which was required under the CST Act, like F form, H form, E1 sales, E1, E2, C forms. All those forms has to be given. So coming to compliance. Compliance, there are compliance from the angle of issuing of tax invoices. There are compliance from the angle of filing the returns. Compliance for the angle of treating of advance. So let us take just an accounting example of an advance. So suppose at the end of the month of July, I have rupees 1 lakh as advance, debtors credit balance from one particular vendor, from one particular customer of mine. So how do I book the liability? If I know my product which I have to sell him is at 18%, then 1 lakh rupees if I have taken as advance, so I will calculate either 18% on 1 lakh, or I will back calculate it, stating that okay, advance is 1 lakh and it is inclusive of my tax component. So my total advance becomes suppose 84,000 and the GST component comes to 16,000. So I create a payable ledger, CGST payable on advance, SGST payable on advance at 18%. So it comes to 8,000. But what do I debit? When I create a liability of advance, I have to make a debit to some ledger under my accounts. So what do I debit? I cannot debit the debtor account, because when I had received the advance, I had already entered bank to debtor 1 lakh rupees. So as soon as if I debit the debtor account, then my debtor balance would not match. So again, for this purpose, I need to create a clearing sort of ledger, like debtor advance adjustment clearing account. So I will pass an entry on the month end. Debtors debit credit balance advance clearing account debit to CGST SGST payable on advance. And when I will pay this advance tax advance liability on the next month by the time of filing GSTR 3. Now suppose in the next month I raise an invoice against this advance. So when I raise an invoice against this advance, when I raise an invoice, my system will automatically capture the data. My system will automatically capture the tax amount based on the total invoice value. Suppose the total invoice value was 1,20,000. So when I raise a tax invoice, I will raise a tax invoice 1,20,000 at CGST SGST 18%. Suppose 24,000 and total 1,44,000, and then I will say less advance received 1 lakh rupees on the face of the invoice. So again in the next month, when the invoice is raised, my CGST SGST liability is hit with 24,000, 12,000 each. But out of this 24,000, in the previous month I have already paid 16,000 to the government on advance of 1 lakh rupees. So what accounting do I pass now? So in the next month when I pay this tax liability of normal of invoice, I will pass an entry CGST payable 12,000, SGST payable 12,000. To debtor clearing advance adjustment account 16,000, because this 16,000 has already been paid, and to balance NVAT credit, ITC credit or to bank. So advance clearing account has now become very important in case of supply, wherein we receive advance and then make supplies, and at the month end there is some advance amount lying in the books of accounts. It becomes very important to account for the same. Also, a pertinent question that comes up here is, suppose I have paid the advance in July, but I have not issued a tax invoice in the month of August. So whether the advance component which I have already paid tax in the month of for the month of July, whether I can adjust the same with my August output liability, though I have not issued a invoice against that particular advance, it cannot be done. If you see the return, there is no disclosure requirement there, but the return mentions that advance adjustment for invoices which has been shown in part 1. So if you have not shown the advance, if you have not shown the invoice in the part 1, then there is no advance adjustment question coming up, because they are trying to link the same. So debtors clearing adjustment account becomes very pivotal under GST regime, and one needs to properly account for the same, because if you do not comply, then law becomes tough for you. Similarly, in compliance, one issue would come up wherein any advance is paid to any unregistered vendor. So as we discussed, the time of supply for RCM for unregistered supplies is invoice or payment. So it was payment within 60-day payment, provided it is made within 60 days. So for time of supply under RCM, payment is the criteria. So advance also becomes a payment. So if you have supplied certain advance to a URD vendor of 1 lakh rupees in the month of July, and he supplies the goods or services in the August, on 30th of July you have to create an RCM liability on some advance paid to unregistered vendor. So again this debtor clearing ledger, creditor clearing ledger comes into picture, because in that case what will happen? You have to create a liability CGST, SGST payable, but correspondingly debit. In that case, the debit has to be made, if it is an eligible input tax credit, the debit has to be made to SENVAT GST credit receivable and SGST credit receivable. Please mind, it is receivable, not your normal input tax credit, because it would only be transferred to the normal input tax credit when the government earns this revenue. Because it is RCM, you have to compulsory pay the same through challan. So for July, you will pay the challan maybe on 19th of August of RCM also. And when you pay the challan under RCM, in that day, you become eligible for the credit that you had booked under receivable. So from receivable ledger, you will transfer the same to the normal ITC ledger, and then only you will be allowed the credit of the same. So accounting compliance is very important for advance cases, advance for supplies, as well as advance to unregistered vendors. Please note, if you cannot account for it properly, then at the time of audit or any departmental interaction, it may not be possible for you to satisfy these people as to on what basis this calculation was done. So it becomes very pertinent here. Mr. Umesh, labor wages booked in books of account for unskilled permanent labor employees attracts RCM. So labor wages, if it is not your employee, then yes, it becomes attractable under GST, 18% GST under reverse charge to be paid. So compliance for URD, for supplies in case of advance, and for advance to unregistered vendors becomes very important. Similarly, when we discussed payment voucher, we saw the law says the payment voucher to be issued at the time of making payment to the unregistered vendor for reverse charge. But now suppose as per your books of accounts, you are booking the tax liability in July, You are booking the expenditure in July, but you are making the payment to the vendor, suppose in the month of August or September. Then when do you issue the payment voucher? Because law says at the time of making the payment to the vendor. So when you make the payment to the vendor, suppose in the month of September. So then you issue a payment voucher in September. But liability to be, if the company takes a call that liability is to be booked on the basis of invoice, because tracking is not possible, then July liability is booked. So in the month of July, you have to raise a self invoice, but payment voucher would be made in the month of September. And again, making a reconciliation of the same will become a hell lot of a task. Ki how much payment voucher to be issued has been issued in 1 month, correspondingly whether self invoice has been prepared or not, and linking of the same may become very challenging. So better when you book an unregistered expenditure bill, make sure that the payment is also done in the same month, so the payment voucher is also done in the same month, and the self invoice is also created in the same month. Otherwise, reconciliation issues would come up to a great extent. And as there is a GSTR 9, if you can see, there is an annual return. This annual return is very categorical. It says that you have to give a reconciliation statement in a particular statement form in 9B, wherein your reconciliation with your annual financial audited accounts has to be made. So this reconciliation is very important, and one needs to be very clear about the reconciliations, because when it's a self-assessment based design. If your reconciliations are not clear, then you may invite various questions from the department, various type of credits you are availing, the checking may be done. So these type of compliances become very important under GST design. So again, when you talk about compliance, first return is coming soon, 20 days more, 24 days to go, or 24, yes, exact 24 days to go from today to file your GSTR 3B. So please analyze what type of details are required, whether your systems are giving those details correctly or not, whether your place of supply that you have selected as C plus S, whether it should be I or not. Bill to ship to is a we have discussed bill to ship to cases to a great extent. What call needs to be taken in case of bill to ship to, whether the goods are to be sent on delivery challan, an invoice to be sent directly to the original buyer, otherwise my price to the third person may be revealed. So many teething issues under this regime would come. But yes, the government is very keen to clear those issues, and you see press releases being released daily basis. Daily some or the other press release is coming. But whether these press releases have any legal backing or not, it has been already questioned before the Delhi High Court, wherein the appellants have taken a view that the press release do not have any legal backing. It cannot be enforced in a court of law. So whether the government intends to bring in necessary clarifications or bring in notifications for them is still awaited. So these issues, various other type of issues would be there. This was from my end. Now if you have any questions, we can take up the questions in the next 10 to 15 minutes. And any other question, because the topic for compliance, first return and transition issues, the two major issues will be 140 subsection 3 and 140 subsection 5. Plus in transition, if you are if you have sent goods to your job worker, please make sure that the job worker also files the details of the goods that he has on your account. Otherwise, if the same does not match in the portal, the credit may be denied to you, or else bring all the goods to your own godown as on 30th June, but that has already passed. So how your accounts can be made and how can you show the same, it is very important. Mr. Ambarish, is there any limit on payment received from customer? Currently our credit period is 90 days. So law says 180 days. So you are under the safe hands. Law says the vendor, if the customer has to take the credit, he has to pay to the vendor within 180 days of the date of invoice. If he does not pay within 180 days, his credit is liable to be reversed. So, but again, it's a self-assessment based law. How can it be done is again a matter of fact. Who will enforce the same is a matter of time only will say that. For transport of goods by road, what is the rate of RCM? Do you need to raise self-invoice? Yes, sir, you need to raise self-invoice. Rate is 5%. For transport of goods by road by a GTA, it is 5%. But if it is a local transporter who does not issue any consignment note or bilty, if you read the exemption notification 11 by 2017 of CGST, central tax rate, you see transport of goods by road is an exempted service other than by GTA and a courier. For GTA, the rate is 5%. For courier, the rate is 18%. Mr. Ravindra is asking, he has to take his goods from, he has to take his goods to Uttarakhand and he has to pass UP for that matter. So, sir, when the goods are in transit, yesterday only the UP trade circular that has notification has come up. You see, they have listed down around 41 commodities on which e-waybill is required for any movement of the goods. But it needs to be analyzed and seen whether when the goods are for in transit, a UP e-waybill is required or not. That needs to be checked. I cannot comment on that because it is a separate notification has come up day before yesterday for UP. We need to analyze that for in-transit movement whether it is required or not. It needs to be checked. We can get back to you on this over email, sir. Mr. Please tell how to avail price revision. Can we issue invoice or price revision at a later date or past period? Sir, transitional provisions covers the same. You have section 142 for the same. It says if there is any price revision for a contract which was entered prior to the GST regime and the price is revised under the GST regime, on the higher side you issue a supplementary invoice or a debit note for the same. If it is price decreased, then you can of course raise a credit note to that extent within 30 days of the price increase. It is not 30 days of the price of the appointed day. It is 30 days of the price increase or decrease. So price revision, you can very well issue supplementary invoice or credit note as the case may be. Sir, we supply goods by trucks via outsourced transporter and charge freight under separate head. Sir, you have to charge freight on the tax invoice. If your taxable value of supply does not include freight, show it on the face of the invoice, charge GST on the total value of goods as well as freight at the rate of what is the value of the goods. What is the rate of the goods? So suppose your goods is at 18%, your value is 1 lakh, you add freight 5,000 rupees, 1 lakh 5,000, you have to charge GST at the rate of 18% on 1 lakh 5,000. You cannot show anything below the tax line item, any charges. You can give discount below the tax line item, but if any charges is incurred for any supply before or after the movement of the goods, it has to be shown above the line item and GST to be paid on the same. So I would like to then conclude by saying that first return 3B needs to be filed. 3B they have given a relaxation wherein you need to only portray the value details, but please don't feel relaxed because 20th August you file 3B and then between 1st to 10th September you have to give the details of the same also. So it is just a matter of 1 month that they have given, but you have to be ready. Your data capturing should be done in the formats as shared by the GSTN portal already. If you are using ASP, GSP services, it is separate, but for general SSCs who are not using the same, you please ensure that your system captures the necessary data, line item data, so that you can fill in the Excel sheets correctly and upload the same. And very importantly, because it's a self-assessment based design, whatever you will put to the department, they will work on the same. Mr. Kumar, we get a price from a customer which is FOR destination anywhere in India. The PO from customer does not give a breakup of freight. Can we raise an invoice without mentioning type of freight amount? Although expected in this case, we actually have GST paid on the freight. Of course, sir, not required. When it is FOR, it means the freight is already embedded in the value of the goods. You did not mention freight separately. My point of understanding was that if you are charging freight separately, it has to be charged above the tax line item and tax to be paid on the same. It is not necessary that you show it separately. Mr. Rao, if inward supply invoice including freight, for example, 18%, but GTA is only, then again we need to pay GST on GTA. No, sir. GST on GTA has to be paid when you receive a service from a GTA. In case an inward supply is there and the vendor has, and your vendor has already charged you GST on the freight component, that means you are not making payment to the transporter. So if you are not making the payment to the transporter, you are making payment to your vendor who is not a transport agency. Therefore, no reverse charge GT applies to you. It is very clear. Mr. Ambarish, we heard that it is difficult to do price in GST regime. When auto industry are pricing for past pay is a regular practice. Sir, difficult to do because you have to give a reason why. Today you sell me a auto any particular product at 50,000 rupees, and after 20 days or after 4 months you tell me, okay, I'll give you a discount of 4,000 rupees. So what is the reason for that? That has to be understood. But for the old stock, price division provision is very clear, but ensure there is a proper documentation of why this price division has been given. If you can prove that, I don't think you face any difficulty under this GST regime also. Thanks, Mr. Kumar. So just to summarize, as we were there, first return is coming soon. Similarly, you have to file 1 and 2 for the first return, which will also come very soon. Not even, you may have 30 days from today time to file that return, but that eventually has to be filed. So make sure your system is ready to give you those data. 2A is an auto-populated return, they say, but yes, you have to tick the 2A returns. You have to check whether all your input service capital goods are correctly portrayed or not. If the vendor has not given correct details, you have to intimate your vendor, make it corrected. Very importantly, those things has to be done. Plus, at the each invoice level, you have to say to the government whether it's an input service or capital good. Old regime, the ledgers were different, service tax was different, excise was different, VAT was different. Now the service or goods or capital goods or raw material will contain C plus S or IGST. So at invoice level, you need to identify whether it is input, service or goods. That has to be clearly demarcated at invoice level under GSTR 2. We are purchasing paint at 28, but we are supplying to streets and selling at 18%. This, what is the rate of tax for me? Sir, your principal supply is supply of sheet. So the tax rate will be 18% only. 28% credit on paints is a incidental component that you are purchasing. You would be allowed the full credit, no restriction on credit at all. RCM created on consumer goods can be adjusted, sir. As I told you, ITC, and apart from section 17 subsection 5, all kinds of ITC is allowed. So you have to see down your block credit. When we discuss the block credit, we have already have sense for this input tax credit. So once you see if you are not falling under any of the block credits, you are very well eligible to claim any amount of tax that you pay under reverse charge. No issues with that. So return is there. Transition 140 subsection 3, 5, 140 subsection 1. Soon the government will give the trans 1 format which has to be given on online portal. Online portal is not yet fully ready, I believe. Therefore, the utilities are coming in phased wise manner. So also one more important for compliance, please check your payments. Because now if you are registered SSC, you have the option to create the challan. Please go and check whether the challan is coming clearly or not. Because in many cases what has happened, an old trade name under the VAT regime which has not been amended by the VAT department, still in the face of the challan the old trade name is showing. So please see, by paying small amount nominal amounts as CS or I, please check the challan that is generated contains or correct details or not. That becomes very important again. Transition 143, 140 subsection 5, job work related issues. All these has to be portrayed under the TRN1, TRN2 formats, which the government would bring in some time from now. Due date is up to September, but the problem is the more delay we do, we get the credit in the next month. So how is the government planning to bring it? Till today we don't have those formats. The formats are there, but the online portal is not ready for us to file the same. Suppose I am a service provider, I have certain segment credits carry forward in my return. I would always like to try the same, carry forward the same in the month of July and utilize the same against my July output liability of CGST. But if the government does not give me TRN1 to file, how do I do it? Nobody knows. So we have to wait for those things also. Sir, your purchase may be in kg, your output may be in numbers, no issues at all. No linking of the same, not required. Faisal sir, I had already told the rate of RCM is 5%. And yes, we have to raise the self invoice also for GTA. Please explain section 141 for job worker. So job worker, as we told you, job worker is, if you have to send any goods to job worker, you need to send the same to delivery challan. If the job worker is registered, he will charge for only job charges and you will get the credit. If he is unregistered, then you have to pay reverse charge credit. You have to pay RCM on his job charges. Whenever you send the material, you send under the delivery challan, the goods has to be come back within 1 year. For capital goods, the period is 3 years. If you are sending goods to unregistered job worker, then his place of business should be added as your additional place of business. If you want to sell the same good directly from his premises, if you do not want to sell the goods from his premises, then not required. You can very well do the job work. If your job worker is in some other state, you are in some other state, again you have to issue delivery challan. The goods can be sent to delivery challan. But in that case, if he is unregistered and you need to send the goods further for supply, then you need to take a registration in that particular state. If it is the same state, then you can add it as an additional place of business. Nothing much in job work. It is a very simple section. The delivery, the law speaks about intimation, but intimation to be what type of intimation, law is not prescribed. So it is deemed that when you file the GSTR1, you have to give the delivery challan number. So that delivery challan number would be a deemed intimation in case of job work. For transition provision relating to job work, it is very simple. Whatever is the stock lying with your job worker and whatever is the stock lying with the principal, both need to intimate to the department, and if it gets matched, no issues. The job worker can send the goods within 6 months. He need not charge any GST on the same, and the principal is not required to reverse any credit. But if it comes after 6 months, if the job worker is registered, he has to charge GST. And if the principal will take the credit of the same, if the job worker is not registered, then the principal has to reverse the ITC on the goods on which he had sent to the job worker, and when he further sells the same, receives the same, he cannot take the credit, so it becomes a cost for the principal. So transitional provisions for job worker is also very simple in that regard. Sir, job worker GST rate for jewellery sector and textile sector, and for certain particular sectors it is 5%. Otherwise, the job worker rate is 18%. Any undertaking is required? No, sir, not required. No undertaking required. Have his PAN number with you in your delivery challan. Give his exact address and things like that. The law does not want any undertaking from you. In the excise regime, we were required to preserve duplicate for transporter original invoicing. Sir, GST regime, you will get the credit only on your original tax invoice, not on the duplicate copy. So please preserve the original invoice. Duplicate for transporter, if you keep, it is good, but you have to have the original invoice for the purpose of availment of credit. So this PPT I think is available with you all. Request you to please go through the same. And again, it was a very knowledge enriching session from your end, because various good type of questions have come up. I think to the extent of my ability, I was able to answer your queries. And I thank you and thanks Tata Steel for organizing such webinars again. And hope to meet you all again over a webinar sometime soon in the next one. Thank you very much for the patience hearing. Thank you.